welcome to today's episode of The Daily Dose. Today is Wednesday, October 26th, and we saw the markets down today after some poor earnings or lighter than expected earnings from some big tech companies. Last night, we saw Alphabet miss pretty bad, and we saw Microsoft beat, but they were still down today. They saw some slowdowns in parts of their business, and we saw Meta miss, and they also gave worse than expected Q4 guidance, and they tanked. We still have Apple and Amazon on Friday after the bell, so that'll be pretty interesting as well. But right now, it's not looking like the market is loving these earnings. So Meta missed. They're down like 18% after hours the last time I checked. And this is what I was kind of warning against. Even though the bank earnings were doing really good, it didn't mean that these companies were going to be good, and these companies are the ones that are actually going to sway the market. And if you look at the chart, it actually makes sense where we started selling off. So we started selling off right underneath the bottom of this zone here that we knew there would be some selling pressure. It also gives us a little double top here. Not that this is a top, but we knew that this point was significant, so it came down, came back up, bounced off, and this is the first time we're going back to this level since right here and right here, and we did the same thing. We rejected right off of it. So the 39, or excuse me, the 38.90, 38.95 was defended by the bears pretty well. We sold off, and now it looks like we're headed back down towards maybe even the 36.60 to the 35.85, which is the zone right above the low point from the middle of October. So stock market didn't love those earnings. I think we're still going to see a continuation of earnings misses throughout the next several quarters. While the Fed is remaining this hawkish, it's just going to continue to put pressure on these businesses and the economy at large. And I think that you can't really expect anything else besides this. It'll probably just keep getting worse until this rate hike cycle, this tightening cycle is over. Not to say that the market is just going to tank right now after these earnings, but we were rallying pretty hard, and it doesn't look like the market likes what it's seeing. We're about to get another 75 basis point rate hike, and let's say we finish earnings season badly, then it could continue to be rough in the market for sure. So let's take a look at Bitcoin, because it's actually showing a lot of strength, and I will be the first to admit I didn't expect this. And you know what? I'm going to take this trend line out because I don't think we needed it anymore. So Bitcoin is showing some strength. It does do this sometimes before a big sell-off, but I can't just sit here and tell you that it's going to sell off after this rally, because I don't know that. So if it were to sell off, though, where would it start to do that? So right now we're at 20,835 on Bitcoin. The top of this zone, which has acted as some resistance in the past, is around 21,000, but we've seen sell-offs on Bitcoin happen at the 21,795 up to the 22. So anywhere between 21 and let's call it 22.5 would maybe be the first level of selling pressure. If we got through there, let's say Bitcoin shows extreme strength, it could get all the way up to 28,000 before we see any kind of selling pressure. And that would be a big move, but that would be where we would see some selling. Obviously, I'm still looking at this zone from the 17.7 to the 17.5. It's acted as a great base on Bitcoin, but I'd just be surprised if this was the bottom for Bitcoin, if we had this much time to get in. Usually Bitcoin doesn't do that, but oh well. If we take a look at the drops, though, this is actually what I want to talk about. Let's look at the drops on Bitcoin. So let's go back to November of 2021 when this bear market started. And you can see right before it started, 3 big green buying candles. It surged up and then started selling off. Then it found a base, It surged up, looked like it was coming out of that base, and sold off. Surged up and then immediately sold off. Surged up, immediately sold off. Let's zoom in here. Bought up, sold off. Even up here, bought up, sold off. Bought up, sold off. And so now we're kind of seeing this buy up, and then maybe it'll sell off from there. So it has been really correlated with the NASDAQ especially, and if you see the NASDAQ tank because of what's going on with the earnings, like actually let's take a look at that right now. Let's take a look at the Qs. So if we take a look at the Qs, let's take a look at this. So the NASDAQ is right here right now. Let's say it tanks, it comes back down to a level that would make sense, would be 235 on the triple Qs. So let's say we go down to 235 on the triple Qs and break through this low right here on the NASDAQ. I don't know if Bitcoin can keep holding up the way it's been trading in this cycle. So that'll be interesting for sure. I definitely don't think that it's justified that the NASDAQ or that the Bitcoin trades like the NASDAQ. I don't think that it deserves to be traded like that because it really doesn't fit into the asset class at all. But I do think maybe people are starting to see that the debasement of the US dollar and just our economy, that maybe we're going to have to turn somewhere like Bitcoin to solve some of these issues that we have in just the global economy in general. Maybe people are starting to see that. I don't know. I don't really think that's why it's rallying right now. If I had to guess why it was rallying like this, I think it's just something like this, a little super rally that Bitcoin goes into before it sells off. That's what makes sense to me, because if we're about to see a big sell-off on the NASDAQ and the S&P 500, it would make sense to see it here too, and right before to get a big rally. So that makes sense to me on Bitcoin. Obviously, do your own research, come to your own conclusions. I'm just here to tell you what I see and give you something to listen to, but that's what I like there. So I'm going to wrap it up there. Obviously, huge miss today on Meta. We have some big tech earnings on Friday after the bell with Apple and Amazon, so make sure to stay tuned to the channel. If you like this type of content, please subscribe on YouTube and follow wherever you listen to podcasts. I really appreciate you watching or listening to this episode, and until next time, I'll see you then.